Alright, April trade reviews. April was a good month. Finished up 5.96%, which was good. Took 1, 2, 3, 4, 5 trades. Well, 6 trades. 5 were winners, and 1 was a loser. But I totally did not ride the full wave of these trades, because take a look here. 0.5%, 2%, 0.5%, lost 1%, made 3%, and less than 1%. So no 3 to 1s except for one trade here, which is not good. We need to start striving for bigger moves. So first trade that I took was the pound US dollar, and this one really kills me, man. Every time I look back at this trade, I can't believe. It was a beautiful setup. I knew what it was going to do. I had great faith that it was going to rally up, hit this demand zone, and then move up to at least the weekly supply zone. That's exactly what it did. And somehow I only pocketed 0.5% on this one. So could have been a 4% winner. So instead of getting 5.96%, I would have had at least 10% for the month if I had played this one correctly. And actually even more, because I think there was a confirmation trade that I missed on this one, which really sucks. Now that I look back, it's like, oh, how did I miss that? So anyways, let's take a look here. I was looking at the US dollar dropping, which would have given the upward momentum on the pound, which is exactly what happened. I had 2 targets, one over here and one up here, conservative one, before even getting to the weekly supply zone. $46 winner. I didn't like the fact that it was coming back down to test the zone. To me, it seemed like it was going to break through. Well, that's not what ended up happening. 2 tests and then it shot up like a rocket. So I was looking for a confirmation on the 4-hour after the second test, because I figured, oh, looks very strong now. Let me look for confirmation. But here's where I missed out on that confirmation, because this was a broken trend line. Oh wow, yes, this was the area that broke it, but also the extreme. And what ended up happening was that we had price break through that extreme, come back to the newly formed demand zone here from breaking that extreme, and then boom, like that. So that only was a 0.5% winner, which really is too bad. So let's take a look at the charts. See, here's the entry number 1 that I took. This one, and then the 4-hour wow was, or the 4-hour confirmation trade was in here. So first target hit, second target would have been hit, I believe, right here. And then the 4-hour confirmation. Let's take a look at how that played out. Yep, right there. Right here. And that was the spot to get in right here. After taking out these highs. And then look at that move. Damn, what a move. What a move. So that was the pound trade. Okay, let's look at the CAD Japanese yen. CAD yen. What happened here? Oh, a short trade that I wanted to take. Oh yeah, here's another one that played out so well, and I believe I got out early on this one. Oh gosh, I don't know what's with me getting out early all the time. I really got to work on that. $200 winner. Yeah. Okay, let's see what ended up happening with this one, whether it was a good move or not. So I wanted it to rally up, get triggered here on the daily for a drop down, 2 positions. Monthly wow retracing, so I was expecting a drop. Weekly wow demand zone was created as well, and price is retracing. Weekly interchange located right where the daily supply zone is located. Right here, yeah. Flip zone, trade activated, right there. potential for another short with an H4 confirmation. Badly formed zone though. Result, $200 winner, close trade early because H4 is extended down and pull back in, bring price all the way back up. Yeah. Extended drop, drop, drop. Okay. I got in up here. So let's take a look at the CAD yen and see how that played out. Right here. Was it there? No, right here. Oh God, another trade that completely dropped. Yeah. Where do I have my targets on this one? Let's see. DD. And then one down here. So 81.90 and 79.60. So the 79.60 is still here. 81.90. So 3-to-1 got hit. 3-to-1 got hit on this one. Second target didn't get hit. $81.90. Right there. So I would have moved my stop loss above the latest supply, which is up here. So I'd still be in this trade for half my position. So I took $200, which isn't bad. And then the confirmation on the 4-hour after hitting. Let me see what ended up happening with that. If that ever played out. Wow, don't tell me. Is that the same zone? Is that the same thing? Damn, look at that. Holy smokers. Wow. Confirmation. That's the same area. Wow, and look at that. Right here. Yeah, same spot. So, drop base. Drop base. So there's, yeah. So the zone was already broken when this trade took place, or the trend line was already broken if you're counting all these areas here, these 3 zones here. So you would have had to have further confirmation, which happened here, right there. So there was a few trades to the downside. Yeah. Oh, that's crazy. Wow. Okay. Alright, so could have done a little bit better on that, but still made money. So let's go to the next one, which is EuroCAD. I have it listed as the Aussie, so let's go to that one. Aussie US dollar short. 2 targets off of this zone. Downward trend line. Weekly wow. Nested just below the weekly. Did I make money on this one? This looks like no, stop loss hit. Yeah, I was gonna say this looks like not a great high probability trade setup. I mean, so much consolidation. Price can easily just break through this area and head higher into this area here before a drop. No consolidation. Away on the drop, so you need confirmation. So what did I say about this trade? 6 months trend line is in control and force of price is up. 3-month bull engulf in control. Monthly obvious trend line is broken and new monthly wow demand zone created below. price retracing downwards, weekly well created, and price now making another weekly well supply zone. Okay, yep, at the top there we can see that daily supply zone that removed the weekly bull engulf for the short, bouncing off a tested daily demand zone right now, right here, bouncing. Yeah. Yep. So let's take a look at how this played out here. Let's see. So that was the zone just a little bit higher. Yeah. Just, yeah, oh God, yeah. Yeah, I know what happened here. So just broke the zone, one candle doji, not very strong, broke right through it, tested the weekly area of supply. So need confirmation because there's no consolidation away. Here's the weekly area. Damn, and we had consolidation. And we had confirmation. But confirmation weekly would have needed daily. But look at that. You even got a 4-hour confirmation. You know, here's the area. You know, right here, triggered short. But that would have been an illegal trade because it would be a 4-hour confirmation off a weekly zone, which doesn't work. We needed a daily, which we got, and I was watching this one. We got this zone here who broke through this area here. So I was looking to take shorts there on H4 confirmation, which actually happened because this zone here took out this zone here, which took out this zone here. And there's your short setup. You know, I saw it, I drew the zone, and I said, nah, this is too good to be true, it can't just play out this easily, and then it did. And I was like, oh, okay, thanks, appreciate it. So, missed that one. Missed that one. Alright, so let's go to the next one on the list. Was EuroCAD. EuroCAD was a winner, 45 bucks, not much. Only took 0.5%. Let's find out why. Alright, so let's see what's going on here. Reacting from a monthly supply zone. Here. Monthly was down, reacting from a monthly supply zone. We got a bearish engulfing there. Downtrend on the weekly, and price was dropping. This 4-hour zone took out a daily. Bad formation. I was looking to short EuroCAD. Let me take a look here. EuroCAD. Okay. Okay, I see. Right here. At the bottom of this big rally up. Let's see on the 4-hour what happened here. Right there, it worked for a little bit and then reversed. Price reversed. So this is one of those times where getting out of the trade worked, but if I'm going to stick to a rule, the rule's got to be leave your trades alone. End of story. Because for this 1% loss, I could have gained big time with the other trades that I should have left open. So yeah, a little bit of a drop down, and then it shot up like a rocket. So price reacting to a daily imbalance that may cause risk on this trade, so I will exit. Oh, daily imbalance, I gotcha, right here and right here. Yeah, it was questionable, so I got out. And that turned out to be the right move, because that turned out to be exactly where price retraced. down to before it shot up. So that was a good call. Alright, let's get back. So that was a Euro CAD. Next one is the Euro US dollar. Let's see what I did here. Euro US dollar. Taking some time to load up. Wondering if there's something wrong here. Let's give it another shot. 222. Boom, right here. Okay, so, oh yeah, okay, oh, I remember this trade. Worked out extremely well, and I only took in, what was it that I took in on this? Oops, right here. Euro US dollar. Oh yeah, a full 3%. Yeah, but there was actually two trades here. One here, which I missed completely. Oh, how did this get reset? Okay. Okay. So 1, 4. Yeah, there it is. Trendline break. Trigger 1 here. This one I missed, but this one I got. 3-to-1 move, boom, to the upside. A quick 3%er, which was nice, very nice. But I could have had two trades on this sucker because I had planned it to take a 4-hour confirmation off that daily zone. I wasn't quite sure what area is going to react from, but this was the area that broke that supply zone, so I was focused on here, and it ended up working out really nice. Yeah, right there I was triggered, and then straight up. Okay, nice winner on that one. And last is the Aussie New Zealand long. Aussie New Zealand long. Oh, I wanted to take a trade off this bottom zone. Nest it within the weekly demand zone that removed the supply zone for the long after the monthly chart had 2 ERCs extend. More on this on the review video. So I have come to learn something by staring at these charts over the last few years and analyzing over and over again. So there was some daily demand zones that were created that price could have retraced to and bounced from. So there was this zone here, and then there was this zone up here. Rally base, rally base, rally base. Overextension, so we have to wait for weekly zones. But let's say this wasn't overextended. I still would have waited to take a long at this weekly demand zone, because once you get action like this on the monthly, 2 big ERCs, you're looking to take trades off of weekly zone. Okay, if you start paying attention to daily zones, you're going to get stopped out, is what I've noticed. So extension on monthly, look for weekly. Extension on weekly, look for daily. But you see, extension but no zones, so you look for weekly. This is extended, but there's a weekly zone, so you wait for weekly. If let's say, under what scenario would I take a daily? Let me see, under what scenario would I take a daily? Well, definitely not this one, because if one of these zones had removed up here a weekly zone, I'd take it on confirmation, because I've seen those work. But we are also hitting this area here. this resistance area, so I knew that there was going to be some kind of reaction to the downside, so I wanted to wait until a higher time frame zone got hit. So that's this here. That was this here. So what happened? 2 half positions planned with 2 targets. Waiting. Triggered long. Boom, right there. Nice 4-hour wow being created off this weekly. Moving first target just below daily supply. Closed for profits. I didn't really specify. Let's look at the spreadsheet. $82, Aussie New Zealand. So what happened there? First target adjusted to just below daily supply zone. I think this was the trade where I think one of my targets was triggered without price even reaching to it. I think I remember something like that. So let's take a look at what actually happened with the Aussie New Zealand so we can see whether the analysis was correct or not. Alright, so yeah, it was a nice move. Boom, straight up. Worked out really nice. And that was from here, right here. Is that the same thing? Let me see here. Yeah. Ding, right here. So that was the entry here. And yeah, so it never retraced down to this area here. And here. And got too high, so it never even retraced. And it was a nice trade. Worked out. Once again, didn't hold. Got out. What was the reasons why I got out? Didn't even say. Moved first target just below first target, then left the second target. What was I thinking about on this one? Right there, then down. Yeah, worked well. Worked well. Would have been a nice 3-to-1 winner on that one. So, moral of the story is hold on to the trades and stop getting out early, because that seems to be the pattern with my trades quite often. And I think this was the same pattern I found last month in my reviews. So it's definitely something that I have to stay focused and be working on constantly, is to just stay committed. You did the analysis, and whether you're right or wrong, let it play out. So that's it for the trade reviews for the actual trades that I closed. And on my next video, I'm going to go through all the canceled setups to take a look at how those ones played out. So we'll see you there.